All right. Hi, everyone. This is Carmel with the Financial Tea, where we talk about all things money, not people, unless it's about our money. So, today's topic, I actually want to talk to you guys about penny stocks and why you should stay away from them. Let me just give you a little bit of backdrop as to where this is coming from. Last week I came across this post in one of these groups that I'm following, and this woman, she did it literally out of the kindness of her heart. She posted in the group about how she invested in this stock, this penny stock, and basically it was $1.65. The price went shot up to $22 and change that same day. She dropped the name and basically encouraged so many other people to go ahead and invest in this company, buy black, and she was just happy to share the wealth. And so at first I was just like, oh my gosh, so many red flags are going off in this. First of all, the name dropping of companies, because once again, there's investing is so much more than just name dropping of companies, and I talk about that all the time. But the biggest problem that I saw was like penny stocks. You do not invest in penny stocks. And so at first I was going to just ignore it because it's kind of like something where, a lot of times is people who are set in their ways, they just want to do or going to do what they're going to do. But then the thing that got me was that I saw over 330 people had liked the post. And once I saw that, I was like, oh, I can't just let that sit there with so many people now. And when I was reading through the comments, so many people were like, yeah, thank you. I'm investing now and blah, 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 blah. And I was just like, ooh, that's a lot of people, especially black people, who are really trying to get their hands in investing. And many, don't really know, and they're looking to others to help them, who are basically being led astray. So I said, you know what? I'm going to go ahead and say something. So I drafted a post telling them why not to invest in penny stocks. And I said, hey, it's susceptible to what's known as pump and dump schemes, etc. But I got the feeling that I was basically speaking a different language to a lot of people. Only a few people came and took the time out to read. So I said, after going back and forth with some people, respectfully, I said, you know what? I'm going to post this video eventually that's going to explain why to stay away from penny stocks. And I'm going to use the company, which is a black owned company. So I know it's a catch-22, and I'll talk about that towards the end of the video. But I'm going to use this company as the example as to why to stay away from penny stocks. Okay? So with that said and done, bear with me. All right? So anyway, here's the name of the company, and I just want to go ahead and read to you guys the actual post that the woman posted. I blocked out her name and information in the group because, once again, I 100% believe it was no ill intent. I just want to use this as a teaching lesson, and I did let people know in the group. I posted in the group I would be posting this video sooner. Rather than later. Okay, so anyway, here's her original post. It was posted on Tuesday 6/16 at 4:24 p.m. All right, it says, if you thought us investing in each other doesn't work, she said, I purchased stock in this black owned company for roughly $2 a share, and I think she said later on like $1.65, something of that nature, and some per share. It doubled yesterday, and it doubled and today it's $25 per share. Y'all keep it up. Invest in each other. And if you guys know of any other black owned companies with stock options, please let me know. How I play the stock market, pay attention to economic trends. So this was her post. Okay. And so then here was the picture of the company. So I'm showing you the mouse. Here's the picture of how literally the company went up that day. So according to this, it was $6 on the 6/16 when I came across the post, and I came across it well after market hours. So the market had already closed. I can't exactly remember what time it was when I came across this post, but it was after the market had closed, which closes at 4 o'clock. Boom. So that whole day, the share price started at $6. You can tell because it went up $20.65 that day. So the closing price at that time was $26.43. That lets you know that it went up about $6. It was $6 that day before it went up. So $6 to $20. I just wanted to let you know for a stock that's so small in price, a movement that big is really unusual. It actually went up 315% that day. Okay, so just some sort of red flag. I know some of you are thinking, hey, this is what stocks are supposed to do. I'm going to go ahead and bring the point into you in a moment. All right, next, the next thing I put here, why did I put this here? Let me move this real quickly out of the way. Okay, the top is still the same. Oh, and here's where I put it here because I saw 333 people, plus I guess a few names over here who liked the status. And I said, you know what? That's too many people to just go ahead and ignore it. Okay, so that's why I felt led to do the video. So now, here's the first thing. The first thing is, before I wanted to go ahead and tell them why not to stay away or why to stay away from it, I, of course, had to do my research. You guys know that this is what I do for a living, right? So anyway, here's what it is. So like I said, and I suspected with a penny stock, when I told you guys about pump and dump scheme, let me tell you one of the biggest problems with penny stocks. Penny stocks have what's known as, well, not all stock, I mean penny stocks, just all stocks. All stocks have what's known as outstanding shares. What are outstanding shares? Outstanding shares basically tells you the total amount of shares that any company has. All companies have that they basically make available to people to invest in. So that basically tells you the many different parts of the company that we have available to go ahead and buy into the company. So one thing you have to understand, and what does that mean? So Amazon, for example, had, the last time I checked, maybe around 350 million outstanding shares, which means it's divided up into 350 million different parts. And anytime I buy one share of Amazon, which is currently like $2,500 a share, $2,600 a share, that means I own one of those 350 million shares, okay? Microsoft has 7.7 billion outstanding shares. So that means every time I buy one share of Amazon, I'm owning one part of the 7.07 billion shares of Microsoft. Okay, so every company has what's known as outstanding shares. One of the biggest things I need you guys to understand about penny stocks is that penny stocks tend to have too little or too few outstanding shares. What does that mean? That means that they're basically divided into very small parts. And what do we mean by small parts? We're talking about 1 million, 2 million, 3 million sort of shares. Like I said, major companies tend to be divided into hundreds of millions, and some even billions of shares. Okay, when we talk about your regular stocks, even if they're small in price, they tend to be divided into millions. You know, we're talking about hundreds of millions, sometimes even billions of shares. So they're divided into many different parts. Whereas penny stocks are divided into, 1 million or less, a few 100,000, few thousand shares. Why is that a big deal? It's a big deal because that basically means that, in essence, in a big company, right? If I buy a part, or let's say I buy 100 shares of a company, right? 100 shares may be a big deal to me, but 100 shares to that company is a drop in a bucket. Like it's like an ant to, a dinosaur. It's a drop in a bucket. It's nothing. So with that in mind, you have to understand then how much influence do I have then on the price of the company? I don't. Even when you're talking about major investors, who own millions and millions of shares in a particular company, if they were to pull out their money in a company, how much effect or impact would they have on the company? Not much, because it's divided into so many different parts. There's so many different investors out there that, in essence, that helps to protect the company from the fluctuations of individual investors. Okay, so this is one thing I need you guys to understand. The problem with penny stocks now, on the other hand, if you're talking about a few thousand shares, 100,000 shares, even a million shares, and then you're talking about low prices, we're talking about $1 per share. Like the woman said, she got it when it was $2 and change per share. I think when I looked it up that day, the lowest price was like $1.65 a share. So you're talking about somebody who can walk around with tens of thousands of dollars, $100,000, $1 million, turn around and invest into that penny stock. And in essence, they're owning almost all or most of the shares. So what does that do? That's going to do what to the share price when they buy it? It's going to drive the price up. And then as people see as people just see the price going up of the company, what are they going to do? They're going to flood and think, oh, this penny stock is doing something. It's a good deal. Let me go invest. Not knowing it's really one, two, or a few people who are basically manipulating that small penny stock, knowing that there's too few outstanding shares there. And then what are they going to do when they see enough people put their money into it thinking it's a good deal? They're going to pull their money out. And this is what we call a pump and dump scheme. You hear me? Pump and dump scheme. They're susceptible to it all the time. So why am I telling you all this? Let's go back to the example of Urban One on the date of 6/16, June 16th, when this woman made this post. That day, the price, and I took the picture, like I said, and when I took the picture, I noticed that what she said was correct. The price was really low, all right, and then it went up all the way. I'm talking about from, it was like, I keep saying $1.65, so I'm going to say that, but let's just say $2, like she said in her post, and it went all the way up to like $27. And then what happened was I noticed this big old dip slightly after the market closed. When the market closed, there's some companies that still allow the buying and selling of stocks and what's known as aftermarket hours. That's why you see the after hours. And so right here, you saw that this dip happened where it lost $20.67 5 minutes after the market closed, right? So 5 minutes from its high, it went down and lost $20.67. So what does that mean? For the price to have moved that significantly, you see that big dip right here? For the price to move that significantly, what does that mean? That means that it was an individual who did what? Who had most of their money in this penny stock, and then they bought up all of these shares because it was $1.65, right? You could buy up a million shares if you're a millionaire, right? You could buy a million shares if you're a millionaire, and then you turn around. That basically means you own most of the company now, because it only had 1.4 million shares or 1.58, I can't remember, but a very few million shares at the time. And then what did they do? They pulled their money out when the price went up to the $27 a share. And so that means whoever bought it for $1 a share, pulled it out at $27, left it worthless for a few minutes at $6.52 a share, which is exactly at this time. And then this woman went on and posted on social media and Facebook how this was such a good company. And many people turned around and did what? Even from reading from the comments, they turned around and invested in this company. So what did they turn around and do? They bought the share price back up. And by the time I checked, it was now up to like $22 at that time. So this is the problem. So many other people started moving into this thing because of the name that she dropped in this company. So why am I telling you to do this? Here's another big problem with these pump and dump schemes. Okay. What eventually happened was that now I had to go do more research. And I'm like, this is a huge problem. First and foremost, remember I told you about shares outstanding? If you want to find out any company, if you want to find out if a company is a penny stock, you better go look at those outstanding shares. It's 1.58 million shares. Like I told you, many other companies have significantly more outstanding shares. Okay, and I'll show you an example in a little bit. Okay, so I already told you guys about that. I'll show you later. Okay, so anyway, not only that, here's the biggest price. Here's the 52-week high and low. So as you can see, The lowest price that the company was worth was within the last year, 52 weeks, was 95 cents. The highest price was $40. So some of you may be saying, oh, well, that's not really a bad thing. If you're getting it for $22, it's right in the middle. It's not really a bad thing. Yes, technically you could say that, but here's a big problem. If you start looking at the moving averages, the 50-day moving average, meaning for for the average of 50 days, the last 50 days, its share price was what? $1.56 a share. And if you look over the last 200 days, right? The last 200 days moving average, its average share price was what? $1.73. That means then that the $40 is not like it's, or even the $22 is not even like it's the norm. It's far above what's normal for this company. You understand that? So even if you're paying $2 in average, based on this information right here, even if you're paying $2, you're basically paying significantly more than what this company is ever worth. That's what I need you guys to understand. Okay? And why does it look like such a great thing? Because people who knew better turned around and they pumped the stock up with their money. And then what are they doing? They're pulling their money out. Now, here's the next thing I want to stress to you guys. Market cap. Whenever you buy any stock, you want to pay attention to market cap. Market cap tells you the value of the company. Now, what's interesting is that when I did the math, you see this right here in my calculator where it says 2.5 million in essence. When I did the math of the $1.65 times the times the 100 and I can't remember what it was at the time, 140, 1.4 million or 1.58 million, whatever. When I did the math, multiplied it, that's how you come up with the market cap. The point is the company only had a worth of a value, a market cap of $2.54 million. That market cap simply tells you how much the company is worth. You get it by multiplying the share price times you get it by multiplying the share price times the outstanding shares that give you the market cap. Now, when it came to what happened was, then by the end of that day, right, when the price had went up to $22 a share, then what eventually happened is now the share price was no longer $1.65. The share price was now $22 a share. Then what happened was that, or 27 by the market close, 22 in the after hours. So I think this calculates the when the market closes. So the $27 a share times the 1.4 million shares that they had, it did what? It brought the market cap up to the $304 million. So now here's your other red flag. Do you think a company just changes that much value overnight? No, it does not. There's no way in heaven, unless something strategically happened and changed with the company, which usually even strategically is not going to just change the value like that significantly of any company really overnight, just like that. The problem is this is a huge red flag, and this suggests what? A bubble waiting to burst. So when this happened, when you're talking about this kind of growth and there's no real reason as to why, then what's going to eventually happen? That suggests, once again, the pump and dump scheme. Somebody's going to pull their money out. Investors are going to pull their money out, and it's going to leave anybody else who doesn't know what, basically with a worthless stock. So now let me explain to you what happened next. Okay? So look how it performed the rest of the week. And I'm just going to go to Robinhood and show you guys that. So this is the weekly chart, right? And I told you the 16th was when she made the the post, right? So the 16th, it went high to $38.77, right? Then the 17th, what happened? People pulled their money out. It went down 17, 12. I think by the end it was $12.37. During the day, it actually went down to $6. Again, I remember somebody specifically posting, and they responded to my comment that I put on there about penny stocks and pump and dump scheme, and they're the ones who told me it was $6, it's like something cents that day. So the point that I'm trying to make is this is what happened. And then some of you may say, well, it's still a good deal for the people who bought it at $2. True, but it's a horrible deal for the people who came in and saw this woman's post, and then they turned around and did what? Bought at the $22 and bought at the $30 and $38, right? Look at this. The price went all the way to $38.77, and then turned around. And then they're walking around with $17, $15, $12, $1.6 stock. And what do you think so many of those people did who basically didn't understand investing at all, didn't know anything about this company at all, turned around and did when they saw the stock falling, pulled their money out. Then what eventually happened, so this was Wednesday, June 17th, right? Thursday was June 18th, and then the hype of what was starting to come about? Juneteenth, right? Juneteenth, support black businesses, yeah. And somebody, I remember, posted an article about how this gentleman who was an investor, non-black might I add, who was basically saying that a lot of people are investing in black businesses because of Juneteenth, blah, 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 blah. And so somebody turned around and posted the article again. And what did I say? Stay away from penny stocks. Period. I wasn't going to go through the whole spiel. Again, stay away from penny stocks. So what do we see? The hype start the 18th. The price goes up 26, 20, whatever. Goes down. Boom. Goes up to 34. Goes down. And when you see these big fluctuations like this, these are percentages. Look at that. Plus 288. Plus 351. Plus 420. Right? So you see what's happening? It's moving significantly. Hundreds of percents. Stocks don't tend to move like that. Anything with a significant amount of outstanding shares do not tend to move like that. So that's a huge problem. So anyway, it goes up, goes down, and then boom, Juneteenth comes. What happens at 9:30, exactly when the market opened? The price went all the way up to $52.50 a share, right? Everybody's like, support black businesses. Of course, all these people are going to be supporting black businesses. Support black businesses, etc., right? Then what happens during the price of the day, right? It went to went down to $41 a share. So you know somebody came and removed their money out. Boom. It went to down to $34 a share. So you know some more came and removed their money out. It briefly went back up to $42 a share. $36 a share by the time 10 minutes before the market closed. And here's what eventually happened. By the time the market opened today, right? Today is the 22nd. The price is now worth $25.79. So all these people turned around and did what? They sold their shares during the, not all these people, it's a few people who turned around and sold their shares in the after market hours of Juneteenth. So this is what I'm trying to tell you. And I had the conversation with this woman too, as well, that I understand how we all want to support black businesses. In fact, Urban One, I believe, are the ones who make TV One, right? Where you go find reruns of like Martin and so many other black TV shows. They host Tom Joyner Morning Show and things of that nature. I understand definitely the need to support black businesses. What I do not understand, though, and I'm telling you guys as a serious investor, and I go back to the original comment in this woman's post, she talked about playing, right? You do not play with your money when it comes to investing. I cannot stress that enough. First of all, investing is your money. You have to understand that it's your money, it's real money. And you have to understand that whenever you invest, you are investing in what? Real businesses, period. You're not investing in just some sort of stock. Stocks is not like just this thing that, hey, you can turn around and just say, hey, I'm just going to put money into it and I pray to get money out of it. No, the reason why stocks work is because in essence it's a business that you believe in, and because you have so much faith in it in the long run, and they've given you some sort of evidence that has proven to you, hopefully, that they're going to basically make a nice return on your money. because they're simply going to be profitable. That's how stocks operate. When you decide to invest, you're saying, you know what? I trust this business so much that I'm willing to put my money on the line for this business. And how do they reward you? They reward you as being part owner of that business. So you have to understand that this is what stocks fundamentally are. You can't turn around and put your money towards something and you're calling it playing. How are you playing with your money? Right? I'll be darned if I give somebody money and I had no way, I have no idea how I'm going to get my money back. Unless I feel like being charitable. No, it's a business. It's an investment. So with that in mind, people have to understand that. And like you do with any business, you have to make sure it's a sound business. You have to make sure that when you give your money to them, you're going to have a way to get your money back. So when we talk about Urban One, people should have first tried to understand, well, what exactly is Urban One? First of all. Second, what about them is now going to make them more profitable as a business than it was before, other than the rah-rah of buy black, buy black, buy black, right? So there's ways to do that. Turn around and go research Urban One. Find out what their plans are. Find out, how do they plan to grow the company and things of that nature. I don't know. Just find out as much as you can. Find out how profitable they've been in the past. Find out why their stock price was pretty much stuck at under $2 a share for the longest time. You need to find out all of these things. And then if you find out enough evidence that says, you know what, I like what this business is about. I see that they just need the money. They got great plans and they're going to do great things. They're going to go ahead and give me back a return on my investment. You go right in and you go ahead and invest. But if you can't prove any of that, then you have no business investing in this. And then what's worse, you have to understand as a penny stock, there's people who understand that the nature of these penny stocks. They understand that the outstanding shares are too few. They're turning around and doing what? Putting their money in, pulling their money out. Putting their money in, making people think that the stock price is doing really well. They're turning around and pulling it out. And so what eventually happens is the people who don't know better, they're losing all of their money. Now, the only ones who probably are going to ride this whole thing out and maybe see Urban One to the point where it's no longer a penny stock, but now not to say legitimate because it is a legitimate company, but a company that in essence can't easily be manipulated like this, are the ones who are there for the right reasons. They're the ones who are long-term investors. They understand there's going to be a long-term gain. They've done their research. They believe in the company and they're willing to put their money in and ride these ups and downs for the years to come in the company. Those are the only ones who possibly will do well in the company. And then you've got the wicked ones. If I had no morals, I'd possibly be wicked about it. But I'm not doing that, okay? And so other than that, most people who don't understand and don't know better, they have no business. You have no business being involved in a penny stock because this is all it is. It's play for a pump and dump scheme, okay? So here's a few things I just wanted to say. So now, let's go back to Robinhood, though. I'm sorry. Let me go back to Robinhood just to show you this. So by the end of Friday, look what happened to its market cap. Remember I told you that's the total value of the company based on the share price of the company times the outstanding shares. It went all the way up to $1.1 billion. How a company go from $2 million just a week ago, $2.5 million a week ago in worth to $1.1 billion? So that's what you call a bubble. And so you have to understand, could it be possible? Yes, for most companies, it would not even great companies can turn around and make that kind of turn around overnight like that. Not even great companies. So could it be possible? Quite possibly. But then you have to understand and do your research and find out, well, what caused it? You can't just say because people are just saying buy black, buy black, buy black. That just means a lot of people are rushing to buy the stock. But that still does not change the fundamental nature of what the stock is, of what the company is. What about it suggests that it's worth that kind of money? So if nothing has come out of it that suggests it's worth that kind of money, then you should not be investing in that stock. So let me show you a few little things about that, right? And then today, look at it. The market cap is all the way back down to $2.85 billion. All right? So now, let me show you a few things about this. You see this? Earnings per share. EPS. What does that mean? That basically means that they're not profitable. They basically lost money in their last quarter, over the year actually. rather than they made money. Okay, so that's something you want to keep in mind. All right. I was gonna look here because usually they have the things posted here, but I guess not for the stocks too. It may be a little too small for them. All right. Let me show you something else. Remember, I was telling you how to go find outstanding shares. Look at this, 1.58 million. All right. So remember, I was telling you. Oh, let me show you this too. Let me show you GE. Right. GE is a company with a share price that's really low, $7 a share, $6 a share. Right. But look at this. Look at their market cap. I mean, not their market cap. Let me show you. Look at their outstanding shares. They have 8.75 billion outstanding shares. So does that mean that one person or a few people can just come in and flood GE with tons of money, force the share price up, and then pull the money out and force the share price back down again and make their quick profits and trick people out of their money? No, it can't happen. Why? Despite the fact that it's so small. And so look at this. Even though it's $7 a share, right? Look at the market cap of GE. Let me just go to the summary to show you, since it's easier. 61 billion. So share price is $7 a share. Market cap is 61 billion because they had what? I already forgot that quickly. Billions of shares. I forgot that quickly. 8.75 billion, so almost 9 billion shares, right? And so they're worth 61 billion, whereas Urban One, on the other hand, was worth what? It was $24.50 a share now. And what happened? Look at this. Shares outstanding 1.8 million, and therefore its market cap was only what? 277 million now. Okay? So this is what I'm trying to tell you guys. Okay? This is a problem. So if you have to understand that, and here's another thing too. Once again, with the black owned, a woman said, well, I'm willing to take that risk because it's a black owned company. If I put a couple dollars to it, I'm not going to cry because I lost it. Totally understandable. But I'm going to also tell you this. Remember one thing I also always say, we don't play with our money. If I'm investing to win. I'm investing to win. Yes, I want to support black owned businesses. Definitely. But I have to keep in mind too, I'm not running a charity. Unless I'm just saying I want to give money to Urban One. You go ahead and you do whatever. That's fine. That's totally different thing. But then I won't call that investing. That's me donating. Okay? If I'm investing, that means the whole point is that I want to make my money back from whatever it is I put my money into. And so if I know this about this company, how likely will I be to turn around and want to put a significant amount of money? I'm talking about money that I would be hurt if I lost that money into investing. I would not want to do that. And so I know what some people are saying, well, you should never do that when it comes to investing. False. That is wrong. Okay? When you know what you're doing, right? When you've taken the time to learn, when you've taken the time to research and understand how investing fundamentally works in the first place, and then you took your proper time to understand thoroughly each and every company that you decide to invest in, then guess what? It's not an issue about, hey, I'm afraid to lose this money. Never one time have I put my money towards any company without being 1,000% sure I would get my money back. And I've gotten my money back plus more. Each and every time. So the bottom line is, except for when I was newer, when I was newer, I was still learning, etc. And then even me knowing what I know now, I still would have gotten my money back. So the point that I'm trying to make is that in the end, you want to be in that position where you're really trying to use investing to grow your money, to build wealth. You can't do that with companies you don't trust. You can't do that with companies you don't know. All right, so keep this in mind about Urban One. And once again, now it went from a 1.1 billion net worth. There was an article written about it, and then it went down to $200 and now $80 million. But it was just at 2.5 million last week, literally last week. Okay, and then look what this says: shares of some black-owned companies are being frantically bid up by day traders. So these are people who are not even investing in the company. They recognize a lot of the foolish actions of people saying buy black. Not to say that's foolish. I'm saying the problem is the investing part without being not knowledgeable. That's the part. They recognize so many people being hype and not really taking the time to understand that this is still investing regardless. And what are they doing? They're basically profiting. And that's what's driving up the share price. And coupled with the fact that it's too few shares, it's a recipe for disaster for anybody who's thinking that they're going to really get money out of this company. So keep this in mind when you decide to invest, okay? You do not want to invest in penny stocks. There's so many companies. I just showed you GE. Not to say that I would invest in GE, but so many companies that you could actually invest in that will give you a great return for your money. And this, unfortunately, is a recipe for disaster. Once again, I fully supporting black businesses. I'm just saying that in the end, you've got to take the time to do your research and understand why you're supporting the company. And then once you do that, you have to thoroughly plot out your strategy as to how you're going to be successful in that company. This is one of the reasons why I'm so 100% against name dropping companies, just putting companies out there and telling people to invest. Because if people don't understand what it is that they're doing, you're literally leading so many people down the path to lose their money. And that would be in essence, black. The last thing I want to say too, when it comes to that, how do you know somebody who's basically anti-black with a lot of money turning around, put their money into this corporation, knowing that there's so many people who's on the buy black trend when it comes to these companies and investing, and then they turn around and get all these black people to put their money in, and then they turn around and pull their money out. This is what you got to understand, people. This is how it operates. This is how it works, okay? So I hope you were able to learn something. If you have any questions, feel free to ask me. I know this was a long video, but once again, this is how it operates. Let me show you one last thing too, all right? Look at this. If you're talking about what makes this company profitable, you may say, hey, this company's profitable, right? Look at this, 2016, they were in a hole, this is written in thousands, numbers in thousands, so they were in a hole $423,000. The net income means their profit for the year. 2017, they were in a hole $111,000. I mean, they came up, not 11,000, million. They came up, I can't even say the number, $111 million that year. So it was a good year, 2017. 2018, they came up 141 million that year. 2019, then what happened? They reduced to $925,000. So they only made a $925,000 profit. And then now we're looking at the last 12 months. They're basically so far in the current last 12 months, that's what the trailing means, TTM. They're basically in the hole $19 million. Okay? So this, take it however you want to. Does this mean that this is a company then that should be worth $285 million, $1.1 billion? Out of all the companies that's out there to invest in, is this the company that you would want to put your money into? All right. With that said and done, I already said my piece. Stay away from penny stocks. Take care.